Hey, Kwan. Hi, Bia. How are you doing? PIF or HNF. Happy Non-Farm Friday. And HNFF. Happy Non-Farm Friday. HNFF. Hi, Val. How are you doing? Here we go. Daily market analysis again. Hope you're all well. Hope you're all doing very well. With big plans for the weekend. Hi, Ismet. Hey, Serene. How are you doing? As usual, couple of minutes before we get going. Anyone had any interesting trades? Shouldn't have. I was scanning the markets over and over today. Didn't have any trades. So let me know if you did get into any trades today. Good time to go to Japan. Yeah, that's my go-to comfort food. Having a good day, have a pizza. Having a bad day, have a pizza. Always makes it better. Hey Kwabi, good morning. If it's up to me, I would eat it every day. Having a pizza. Pizzas are surprisingly a little bit ridiculously expensive in Singapore. I don't know why, my dear. I'm even this close to getting a the oven of my own that I can make it at home. Depending on how the dollar will be moving today. On-farm payrolls. Everyone get your guess, have an estimate, get a guess ready for the non-farm payrolls. One more minute before we get started. Alrighty. Alrighty, let's get going. Okay. Things will good. Hey Ayakame. Morning. Actually good afternoon for me, but good morning to all of you. Alright, so again, we are here. Friday, first Friday of August. It is non-farm Friday, so a big welcome back to all our regulars and a big hello to all the new people attending this session. What I ask, or what we do here on the daily market analysis, we look at the fundamentals, a quick review of what has happened. Last night we did have the Bank of England with their interest rate decision, so we look into that. We look into fundamentals in terms of what's going on the horizon, which we do have the non-farm payrolls to be released later today or tonight for me. Then we look at the technicals in terms of where price is, where price could head towards. Combine that together, we look for some possible trade setups, especially on a non-farm Friday or with big news events on the horizon. What I tend to do, or what I will tend to do, is provide you scenario analysis where we'll be looking at, for example, if it's a good non-farm number, which pairs I'll be looking at. If it's a bad non-farm number, which pairs I'll be looking at. Okay, so at least we know that we cover our bases. With such a high volatility event, we cover our bases knowing in either scenario, we might have a trade ready to take advantage, or setup ready to take advantage of. So if you are new to the session, link is there for the Discord channel. Do click and join our Discord group. We have a lot of very friendly people there. All the friendly people you can see chatting away. We're all there to help you, help ourselves, help you through your own trading journey, and then we can grow and be profitable together. We can also take our discussions beyond this daily market analysis through the day. If I see anything interesting, any setups that I'm looking at when I'm looking to get in or out of a trade, I will inform you guys on the channel as well. And actually, a lot of our members do also share their views and when they're in and or out of a trade. Okay, if you have any questions at any point in time, please feel free to put it into the chat. Let me know. I'll be happy to address your questions. Look into any particular currency pairs that you want my couple of viewpoints on as well. So a quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to trade a financial product. Your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. And throughout the session, if you find that it's useful, informative, helpful for your trading journey, please help me out. Click that like and subscribe button on YouTube. If you're on trading.live, click that hand clappy thing, and if you're on TradingView, help me click that little rocket ship button right at the corner there. All right, doesn't cost you anything. It just hopefully helps get more people onto the session, just so that we can share the information across towards more people. With that, let's look into it. Okay, so yesterday, right, since we spoke yesterday, we did have the Bank of England with their interest rate decision. Was a 5% increase by 25 basis points to a 5.25%. Right, a 25 basis point rate hike from the Bank of England. What we actually saw was some movements. I'll show you here on the pound dollar. Zooming in a little bit. On release of the news, you can see here at 8:15. What time was it? 7 o'clock actually, not 8. So 7 o'clock when the news was released, it was at 1.2659, spiked down to 1.26, about 1.2620 before retracing back higher again, right? So it came back up. One reason why it spiked down, as I was sharing with you yesterday, typically we do see that following a decision from the Bank of England, we see that the pound dollar does drop, right? Because it was a little bit of a priced in scenario that there was 25 basis point rate hike. So it was a bit of a priced in scenario. Then why did it drop before bouncing back up? The last two examples I showed you yesterday, it dropped and it continued going down. It's really because of the official bank rate votes. All right, it went from a 702 previously, expected 702, came out at an 801. What does it mean by 801? You see that the first number is how many members voted to increase rates. Second number is how many voted to decrease. Obviously, nobody voted to decrease. And then the third number is how many voted to hold. So having 9 members, previously having 9 members, 7 voting to increase and 2 voting to hold, that was what they were. That was the basis since February, right? Since December, actually, 702. That balance in terms of the way the members were voting held all the way through to August, where now we're seeing 8 members voting to increase and 1 voting to hold. So someone here, I haven't got the data, but someone switched from holding to an increase. This gives it a little bit more of a hawkish feel to come, or hawkish view from the Bank of England, right? And that's why we actually saw that brief spike down before retracing higher again. Then looking into the details, this is on The Guardian, looking at the details, some details of the rate hike. Right, it will remain high for at least 2 years at 5.25. I was reading this before. Just find it. All right, CPI fell from in June to 7.9 from 8.7. While they are looking at CPI possibly dropping further. Right, decline in about 7 July and later in the year to about 5% in October. Okay, so it looks like we might see some continual impact on the interest on the CPI data, slowdown in inflation growth, and then 2 members voted to increase by 50 basis points. Where was the line? Maybe not here. What was it? There was, policy needs to continue to be restrictive, right? Higher bank rate is having an impact. That's why we're seeing the inflation growth slow down. I'm trying to find the one that. Okay, now inflation is declining. I'm trying to see that line where it was saying about future rates. Okay, but given that rates or anticipation that inflation growth is going to slow down, I think what it looks like here is that we might see the Bank of England slow down on future rate hikes. We might see the Bank of England slow down on future rate hikes. Most likely, it looks like it will stay at 5.25. They will see a pause. If we see inflation growth continuing to slow down, we'll see a pause on rates at 5.25, but they might hold it there for, like we were saying, the next couple of years, right? Might stay there for about the next couple of years. And then also the line that it rules out prospect of recession. So that's why we actually saw that pound dollar bounce slightly from about that 1.2645 level up towards 1.27, almost 1.2740 level. Okay, so that was the news from yesterday. We also had the US ISM Services PMI slightly lower than expected, 53.9 previously, 53.1 expected, got released at 52.7, right? So slight drop in terms of services PMI, still in the expansionary phase, but slowing down. So at 10 o'clock last night, you would have seen that the dollar here, just 10 o'clock here, started dropping back down, right? Started dropping back down, broke that trend line, now still remains below that support turned resistance level of 1.102.55. So, like I was saying 2 days ago, I would love to see the non-farm or the dollar index head into the non-farm along this level, because it all comes down to what the number is going to be. We could see a good breakthrough or a rejection. So we'll run through the different scenarios coming up. With that was all yesterday. So today, nothing. We had the monetary policy statement from the RBA. Not super concerned about that. Didn't see too much of a reaction. You can see the Aussie dollar sitting right across. The main focus is onto the US non-farm employment change. It was, well, in July, 306, got released at 209. Right now, 209, expected 205. Ayakame has said 250, right? So what I'll give you that 30 seconds to do, put it into the chat. Let me know, what do you think it's going to be? Give me your best guess. There is no harm. We're not entering a trade. We're not doing anything. Give me your best guess on what do you think it's going to be. Decrease in average hourly income can be caused by decrease in inflation. The expert is giving mixed signals. Should goes up and down during the non-farm news. Yes. Decrease in average income. Okay. Very good info there, our trader. Thanks for that. Appreciate that. So yeah, I agree. Our trader on TradingView was just saying that the dollar index is giving mixed signals. It could go up and down during the non-farm payroll. We'll look into that. Okay. Anyone on trading.live going to give me a guess, your best guess in terms of what the non-farm is going to be? Hi Buba, hi Jimmy, hi Spiros, long time no see. Right, Ayakame says 250, BL says 208, 250, 208, Sujin's at 239. Buba is lower than expected. Carson says similar, right? Miron says 265. Okay, very good. So, I was just rattling off the numbers there, but if you, just a bit of a summary, we got most of us 250, 239, being a lot higher than previous, than expected. We have 208 and similar to forecast. Well, we've got a couple saying that it's higher. Quite a number saying that it's higher. A couple saying that it's going to be as forecasted. One or two saying that it will be lower. So Vanessa says lower than last June. We meant July. So it looks like it might be a slightly lower number. So it looks like it's a fair balance. All right, it's a fair balance. But hi AYJ, my Elliott wave setup suggests big reversal on the dollar index, 208. Okay, so RLB says I've seen this content somewhere else. You can't have seen this content somewhere else. It's done live every day. Okay, so what I think, you guys are telling me that we're getting a general view that a lot of you are guessing that's going to be higher. Mixon just said 208. So between higher and equal, seems like quite a number of you are along that line. We do have a couple of you now saying that it could be lower. Buba making that forecast based on his Elliott wave analysis as well. All right, got 250 from Ziparov. I know your name on LinkedIn. I forgot it right now, but yeah. Okay. So what I actually think is likely, or what I'll be looking for here, would possibly be that 230-ish number. I think it might be a little bit positive, but I think it might be a little bit positive, but I don't think we're going to see a big push on the dollar. Why I say that is because I think that the unemployment rate might climb back up, right? I think it might come back up. So it looks like it might be a mixed data here tonight, right? We might see a little bit of a green number here on the non-farm, and then we might see this climb to 3.7, okay? Or we might see this drop to 180, and then we might see this stay at 3.6. So it's just going to be that balance. I feel that right now, based on the employment data, based on the PMIs that we've been seeing for the US, it feels like it's just right at that balance. And also, like we were saying, the dollar index is right at that resistance of 102. So it's finding its directional base as well. Okay. So I think that what we might see is a bit of a spike then along this level, but overall still pushing to the upside. I'll just share with you one more point on this is on the July 7th. It was 306 when it got released at 209. July 7th, let me find it. Far away. Long way away. Okay, there we go. Right, so when it got released at 209, we actually saw the dollar index go from pretty much that 103 level turning down, ended the session at about 102.20. But you'll see that that was after the dollar index capped or hit a high of 103.50 two times, and we saw a big rejection breaking below that interim support level, right? So once it broke past 102.80, we saw a massive downside on the dollar index. So that was the example for the non-farm last month. Okay, so moving on back to the current. At this point, I think it's going to be very important to note that if we do see it above that 220 level, we might see the dollar strength come around, maybe briefly. But if we see it below 200, then we'll see the dollar weakness on that level. Okay, so what I'll do here, I'll show you. I'm looking at this breaking to the upside or a rejection back down towards this point. Oops, and draw a straight line towards this point. Okay, and this, I view that it's possible if we see this being above 220k NFP, above 220. I think we could see that. Then again, I would say that below NFP, below 200. Okay. Right. Also, it's not just that number. Bear this big warning. It's not just the number of the NFP, but it's also together with the unemployment rate as well. I don't think the average hourly earnings is going to change too much, right? Between 0.4 to 0.3 is not going to make a big difference. Those are his turn to the bearish side at this point. Okay, yeah. So we'll run through those scenarios. Then also bear in mind that tonight we also have the Canadian's employment change number, 59.9 to a 24.6. Unemployment rate from a 5.4 to a 5.5. Looks like not very good news on the Canadian front, which might mean that we could see the Canadian dollar weaken against possibly some strength in the dollar index, depending on what this number is going to be. So now focusing back onto the charts, at this point, being the 4th of August, we're looking at the dollar reacting along 102.55 depending on NFP today. Okay, so we have that two scenarios here on the dollar index. Okay, what did the ADP number say? ADP was a bit of a surprise to the upside, right? ADP was 324 from a previous of 455, expected 191. But again, ADP is not the direct correlation to the NFP. So now with that view of the dollar, we're going to start thinking in terms of dollar strength scenarios and dollar weakness scenarios, and plan our setups according to that. Yes, Zoran, hi. Sorry, that moment I forgot. It's not on the name, just slipped my mind. Dollar index will reject to fill the gap, then balance the price, then it should go up. Yeah, I agree. I kind of think of that. Hey, Matic, good morning. So our trader was just saying that we might see this spike up, come back down, and then continue back up again. Highly, most likely the view, right? So I think that most likely we're going to see above 220 number, spike up to that previous high, come back down, and then possibly go back up again to that resistance level. Too many lines on my chart, so I will clean it up soon. So now looking at the Kiwi dollar, right? Kiwi dollar, yesterday we were looking at that consolidation, looking for it to break down. Did not happen. Take that away. And then it shot up. It took a very long time to shoot up. Early this morning, it went up. And then after that, only recently came back down. But it was such a long time since I did analysis. I did not get into this trade. Right, so I did not get into this trade on the Kiwi dollar. Did you get onto this trade on the Kiwi dollar? Do let me know. So now looking at the Kiwi dollar, we see this, stretch it all the way down. Are you closing your trade, running trades before big news or NFP? Yes, if I had any running trades, I would close it off. Right now, I'm neutral. I'm flat on my trade, so nothing to open or close off. Okay, so I'm just checking some levels right now. Okay, and I'll just move this here. So I'll change this to a dotted line. And now we have this at that point. All right. So now looking at the Kiwi dollar, right, it's been ranging. Right, it's been ranging since Thursday. Came down into this range, struggling to break any higher, significantly higher or lower. So it's been held by that 0.61 round number. It's been held to the downside by 0.606465. So if we're considering that, on a dollar strength or dollar weakness scenario, it could bounce. It's right in the middle, so I don't really like it. I don't really like the Kiwi dollar at this point. Right? I would like to see it, dollar index now pushing back up a little bit. See, so the interesting thing is, as much as we're seeing the dollar index looking like it's trying to push to the upside, the Kiwi dollar is trying to push to the upside as well. Right? It's trying to push to the upside as well. What I would like to see here on the Kiwi is maybe over the next couple of hours for price to push up towards that between 0.61 and 6130. So I like it to come within this range. Then I will look to sell it down on a dollar strength scenario. Okay, so that's on the dollar strength scenario. I'll be looking to sell 6110, 25 pip stop loss. It needs to trace up. If it stays within this range, I'm not going to enter a trade or won't enter a setup for this. I want to see it go up and turn down, and then you could even be looking at a 70 pip downward move, 25 pip downward move. So 25 to 75 to the downside on the Kiwi dollar. Okay, I'll put that in and I'll answer one question there. 6110, stop loss 25, take profit 75. That's on a dollar strength scenario. And then later I'll try and rank what I think is which one I like more. Okay, so there was a question there that it looks like it might turn to a buy to the trend line again. Right? I wouldn't be looking to buy the Kiwi dollar. Even if it does go up to that trend line, I wouldn't be looking to buy. Right? The only time, well, not the only time, the time I'll start thinking of whether to, we could buy Kiwi dollars if it breaks above the trend line, then I'll be looking for that big move to the upside. Right? So I wouldn't, if it, not worth trying to buy it up to that trend line. I would be waiting. If it breaks above, then I might think that there is a good correction to the upside. If it doesn't retrace and it stays within this range, news comes out, then I would not be focusing on the Kiwi dollar at all. So with that, then onto the Aussie. Right, on our extended session yesterday, I did get into the Aussie. As it shot back up, I closed out the trade, 10 pip loss on that one. I just got in a little bit too early. Was a bit rushing into that trade. So lost on that during our session yesterday. Right, so looking at this has given me a little bit of a confidence on the Kiwi dollar as well. Seeing how the Aussie has gone up, tested that resistance, and looks like it's turning back down. I like that. Right, it's a bit of a confluence there, forming a little bit of a double top at that resistance, looking for this to trade to the downside. I would like to see the Aussie dollar stay around this range. Right, stay around this range. Maybe we could be looking at 6550. So selling 6550. 80 pips. I don't like it. Let me think about this. Aussie dollar on H4 time frame with a big support here. See a indecision there, forming to the downside. Okay. So what I'm looking for here, very similar to the Kiwi dollar. Okay, very similar to the Kiwi dollar. I want to see it consolidate. I want to see it bounce a little bit. I want to see it test and then reject to the downside. Okay. So I would say that look for it to go up, test that area, sell down 6575, stop loss no more than 30 pips, take profit, have about almost 60 pips to the downside. Look for that. Okay, that sell 6550. 75. Stop loss 30, take profit 60. That's also on the dollar strength scenario. There we go. Okay. Buba, with the question, I'm keen to hear even briefly how you do handle forced breakout. Most of your analysis are based on breakout resistance. I told you that yesterday, Buba. Like, breakouts, candle needs to close. We're looking at an area, not just a line, so a resistance area, not just a line. And yeah, mainly those two. Needs to break out of an area, needs to close out of the area, then I'll get into it, not rushing into it just because it's broken a line. Okay, that was covered yet. I think it was a lot more detail yesterday, but you can check the video from yesterday on that. Okay, one thing, what I'm looking at now, what I'm feeling right now is that you would also want to remember that as much as we are looking at all the setups here, I used to run, and I know a couple of you on the session right now, I used to run live trading sessions where I'll fill a room with attendees. I would put my chart up on the screen, I'll enter trades, or I'll look to enter trades during a non-farm payroll or during major news events. Sometimes it works out very well, but a lot of times attendees, if you're watching, you can also share that we end up sitting there not entering a trade, right? Because the fallacy that a lot of people think about is that, oh, there's a news, I have to take advantage of it. If it's spiking up, I'm going to sell it back down, or if it's spiking down, I will buy it back up or do all kinds of stuff. What I'm identifying here, for example, on the Kiwi dollar and on the Aussie dollar, is really a bit of a safe area to enter. It might not trigger, most likely could not trigger, but it's really there to, if it works, we're going to see a higher percentage, but it might not trigger the trade. Okay. So this was from yesterday, yen bouncing, but still a while more. We saw that, but it didn't complete the bounce. In fact, it started trading between that 38.2 and 23.6 level. In fact, 23.6 has broken. You can take that away. 38.2 being that almost 142 support level. So in this case, that trade did not happen. We'll take that away. That trend line as well is now broken, so we'll take that away. What I'm looking at here, we've got two scenarios on the Aussie and the Kiwi dollar. For dollar strength scenario, perhaps what we could be looking at here on the yen, on the US yen, is on a dollar weakness scenario, right? If we see a dollar weakness scenario, what I'm looking for is for it to break below 142, right? A bad non-farm payroll number comes out, take all these away, right? And it breaks below 142, then you could be looking at about 141.75. Stop loss 30 pips. Take profit, good 90 pips, 95 pips, 90 pips to the downside. Okay, could even go a little bit, entry a little bit lower, 141.70, I would say. Stop loss 30, take profit 90 to the downside. I think that's fair. So in this case, I'm looking at this being that the yen would have broken below that equal low, broken below that support level, that 38.2 level, and then trading down towards that 61.8 or that 140.75 level. So that's what I would be looking for in terms of on the US yen dollar weakness scenario. 141.70, 30 pips. Okay. US yen, I'll be looking to sell 141.70, stop loss 30, take profit 90. This is on the DXY weakness scenario. All right. What do I think about funded accounts? Join the Discord channel. I'll show you, join the Discord channel, and I'll tell you about funded accounts there. Not the right time to talk about funded accounts. We're expecting to make more selling moves. We'll see. Good option. Someone, yes. Could form a lower low on the dollar yen. Other yen pairs are likely to be doing the same. Great. Hey, Diggs, by the way, 7. Good to have you. Okay, so we have that too. Then now looking at the pound dollar, right? So this was pound dollar. We were talking about this. Could enter a trade at 1.2660 down. If you did that, you could have caught that 40 pips to the downside. We spoke about why the pound dollar bounced back up. Now, looking at this, I want to clear out some lines. Let's clear out some lines. That trend line broke. We adjusted. Doesn't work if we adjust it, so I would say that it's somewhat broken. Coming back up, could take this one away because it's broken. Okay. So now looking at the dollar, at the pound dollar, what you see here is that we do have a little bit of that scenario of a shoulder, head, and then a skewed shoulder, right? It's not perfect, it's a bit of a skewed shoulder, and then that neckline forming, that diagonal neckline forming, a little bit of an inverted head and shoulder. You guys see that? See it? Put it into the chat, let me know you see that. I would like to see this come down a little bit. Right? We've got a shoulder there, or we have a shoulder forming there. See the inverted head and shoulder? I think that still a little bit early. So I would like to see the pound dollar do maybe trade down a little bit more before pushing back up. Right? Trade down a little bit more before pushing back up. So in this scenario, I would say that again on the dollar weakness, right? On dollar weakness, and we were talking about this quite a bit. I think Joshua and couple Angel Case was talking about the pound dollar as well. You know, looking for this, forming that. Thanks, Desiree. How are you doing? Right, so looking at this to come down, bounce back up, break above that neckline, above that resistance. Then I would say we could be looking at 1.2780. A big move to the upside, 90 pips. Stop loss can be quite tight at again at about 30 pips, maybe even 35, 40 pips. Right, might go for a little bit of a wider stop there. Then why I like this level, it's also really because of that point, that previous high. So we would say that this could be a move. If you want to be a little bit aggressive, you could be looking to enter a lot earlier, right? As it breaks that neckline, then you would have 30 pips to 120, right? But I'll urge that caution because we do have that resistance level here. So because of that, I would say that I would look for it to break above, preventing that false break there. Then we could look at that scenario. So 100 pips to 35, 1.2775, 35 pip, 100 pip. Okay. We look to buy this 1.2775, stop loss 35, take profit 100. To the upside, we're looking at this on a dollar weakness. And also because we have an inverted head and shoulder. Yeah, I mean that's why. So Val and Carson and Desiree just said, I only see it when you point it out. But yeah, that's why we do this session, right? I'm sharing with you what I see as much as I can. So it's not form, it's skewed. I would like to see it form a little bit better, but we do see that bit of that forming. Okay. So with that, then on to the euro dollar. Okay, euro dollar was I was laughing to myself when I was doing this, because as we were doing the extended session, as it was spiking down, I think right about that time, or yeah, right about that time, it was nice red candle coming down, and I went, could happen soon. And right after I wrote that, it bounced back up, and then it started pushing, and I went, I jinxed it. All right, so that did not play out. But there was one opportunity that didn't happen. It's okay, because we have another one coming up again. So you see that this is still that downward trend line. I would say that the euro dollar, although it's rebounded a little bit, it's still holding along this resistance of 1.0950. Right? So it's still holding at that point. I would say that perhaps if the non-farm payrolls were stronger or resulted in a stronger dollar index, then we could be looking to sell down 1.0930. I don't want it too near, because I think that if it's too near, we might run the risk of it triggering before the non-farm payrolls. So about 1.0930. Stop loss would be about 25 pips. Take profit would be down to about 50 to the downside, towards the previous swing level here at 1.0880. Okay, so I want to see a rejection of this area. I want to see a rejection of this area to push price to the downside. So again, 1.0930, stop loss 25, take profit 50. 1.0930. Take profit. Okay, good. That's on EXY. Okay. Bobby's in it since yesterday. Very nice. Coming inverted head and shoulder is it a reverse? It is. Inverted head and shoulder is a reversal pattern. It's a reversal pattern. So I'm looking for this to come back down, maybe push back up. Then onto the US Swiss franc. We were so close. So close. I was looking at this supporting, and then it broke the trend line. So take that away. Now pushing back up again. Right? Why is it pushing back up? It's really because of that dollar index. Right? The dollar index now pushing back up. You see it came down, turning back up. Very similar pattern. Came down, turning back up again. Don't rush into a trade here. There is still that big resistance level holding prices. Right? It is still holding prices. We move this a little bit higher. Yeah, we'll move it not because of the previous, but the most recent. So at this point, the only time I would be looking if we see that dollar strength scenario, actually in this one, this will be interesting here, right? If we see the dollar continue, I want to see it climb up to this point. At this point, at this round number of 0.88, dollar strength scenario, we're going to see that push up. If not, we're going to see a big reversal back down again. So it's a reaction at this point at 0.88. And I think that with 30 pips to go, we might come close. We might not come exactly, or we might come close. So you have that scenario here on the US Swiss franc. Disclaimer again, this is not, it will not be a trade that I enter because I don't trade the Squeezy. 8790, stop loss very tight at about 20 pips, take profit down to 50. Or in another scenario, you can see that 8810, take profit about 35, stop loss tight, no more than 20 pips. Bit of a straddle there, so we're looking at that kind of scenario for the US Swiss franc. Okay. With that opportunity, I would say that I would prefer to see a rejection. Okay, might prefer to see a rejection. So have a I saw your question there, Kwan. I will get to that shortly. Just in the middle of a thought right now. US Swiss franc, we're looking for a reaction along 0.88. We could be looking to buy at 0.8810. Stop loss 10. Yeah, 10. Stop loss 20. Take profit 35. So you see, it's not a big move. I'll check this again. This level, yeah, that more or less reasonable. You could go to 40 pips, take profit. It's not going to make too much of a difference. And then our rejection will be 8790, stop loss 20, take profit 50. Or we could be looking to sell at 0.8790, stop loss 20, take profit 50. Right, so we have a reaction at that point. So a question from Kwan was that what are your thoughts on considering buying the euro dollar similar to the pound dollar if the non-farm payrolls is favorable? If it's favorable to the dollar, I would not be looking to buy the euro dollar, right? Only if it's bad for the dollar, then you could be looking to buy. I would say that if I were looking to buy the pound dollar, it's either the pound dollar or the euro. I might prefer the pound just because of what happened over the Bank of England rates yesterday. You could also be looking to buy the euro, but I think it will be a slightly higher risk because of that big significant push to the downside. It's climbed back up slightly, but not too much. You could look to buy at, I would say to be safe, it needs to break that trend line, needs to bounce a little bit higher. 1.0970, take profit 70 pips. Stop loss could be tight at about 30 pips to the upside. So you could look to buy if it breaks through. But we've seen the euro dollar have big spikes but unsustained before coming back down again. So I would be a bit more cautious with buying the euro up. I would prefer the pound dollar a little bit more. All right, Kwan, hope I answered your question there. Then on to the US CAD, pushing back up. So we're looking at, again, the employment data from the CAD could be weak. 5.5% unemployment rate. a slowdown in employment change, possibly with that stronger dollar. Most welcome there, Kwan. Or Farm. I hope I'm saying the right name, so just let me know. Farm, Fan, or Min, or Kwan. Which one do you prefer? So on to, so I will get to gold. I will get to gold shortly. So on to the US CAD. Weaker CAD should see this push up. Dollar strength should see this push up. Would I be looking to sell the CAD down? No, just the way it's been moving. You could argue that we are at a resistance level. We could look to trade it down. I think that we have the yen to sell down. Maybe even Vitel. I'll tell you more about that shortly. We have the yen to sell down. We have possibly the Swiss franc with the different directions. We've covered a lot of the bases there. So I would go with the trend following scenario here on the US CAD. Dollar strength scenario breaking above that resistance of 1.3380. Pushing up, some CAD weakness pushing it up higher. Towards the June level of 1.3460. Bit more patience required here, but you'll be looking at 1.339095. Take profit, 5 pips to the upside. Stop loss 25 pips. Stop loss. Right, so it's reasonable. Okay. The US CAD, I would be looking at buying 1.3395. Stop loss 25. Take profit 6. You had that 25 and okay, go. Again, now as we come towards the end, please help me out. Click that like, click that subscribe button. A lot of people watching, not a lot of people clicking. So make sure you do that. And the link for the Discord channel is there again. Do make sure you join us. We have breached 400 members, so I'm looking for the next 400. Okay. Then with gold, a lot of questions about gold. This was a big topic in the Discord group. What's happening to gold? Where do we think gold is going? Right, it's been in that range. I am thinking that we're going to see more downside. Yes, there will be an upside opportunity. There is a downside opportunity. I think that we're more likely to see that possibly the dollar strength come around. Then we might see gold, because of that dollar strength, we will see gold drop. The next big swing level here at 1913. So I would say that if it breaks, don't do anything now, still within that range, it needs to break that support, head down towards 1913. And that could be possible, especially if we see that dollar index really push to the upside. All right, so we're looking for a break of support at 1930 to trade down to 1913. Okay, and a massive disclaimer here is that I have gone through scenarios. I have gone through many non-farm payrolls for myself, trading by myself. I have done this with a group or the analysis. There can be scenarios that where non-farm payroll comes out at 88, for example, or it comes out at 500 again, right? So there could, can't rule out scenarios where it's totally different to whatever we expect. So again, the levels are there, the setups are there. It doesn't mean that you set and forget, especially not during a news event, not a set and forget scenario. Right, what I would typically tend to prefer to do is to have the scenarios there. So I know on a dollar strength scenario, what am I looking for? On a dollar weakness scenario, which pairs I'm looking for? Then when I see the news release, I build an expectation of where I think it should be heading towards. I'll jump to the charts, I'll look for the setup, and then I'll get into a trade. If it doesn't match my expectation or doesn't match what I think should happen, then I'll end up sitting there watching price move, messaging you guys on Discord, having a chat, but not entering much trades. Right? So you don't always have to enter a trade on a big news release, especially on spikes and retraces. Big volatility, big risk as well. Thank you so much, Desiree. Have a super non-farm payroll session. Good to, even if you're not trading, good to watch how price moves and get an experience of that. And if not, then have a super good weekend as well. Enjoy the pizzas, Vel. Thank you, Karsten. Really appreciate that. Thanks, BL. Hyro BAMS, it's on the H1 time frame. When you're trading the news, you can go down to the M15. Unless you're super experienced, I wouldn't say anything less than M15. Like, I do get to the M1 time frame. I'm scalping on the M1 time frame, but I wouldn't suggest that to a lot of people. All right, SHJ, good morning. How are you doing? Alrighty, so with that said, like I said, links are there. Join the Discord channel. Give me the like and subscribe, please. And trade well, trade safe. I'll see you all again on Discord. And if not there, next week, I will be back with our daily analysis. Take care now. Bye.